Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at FX and the British pound. The British pound has been under some scrutiny here as we've seen the pound get hit pretty good. The trend lower, whether you're talking about against the dollar, whether against the euro, it's just seen better days. And likewise because of the Brexit talk and how the ripple effects of leaving the leaving the EU will really cause a lot of havoc, and there's still a lot of uncertainty there. All those details, nothing is for sure yet. As we talk about whether it's the financials or whether we talk about the trade or whether we talk about a lot of different things, but the pound continues to suffer, and especially when you talk about the dollar strength we've seen over the last 2 weeks. Dollar's been booming, and I took a little break from that today, but it's been the strength of the dollar has been evident, and we've seen it referenced to other currencies, and today was no different, although it didn't help the pound bid. Pound suffered today, albeit because of other reasons, but the dollar by itself has been one of the reasons why the pound has been down. And if you look at why that pound was down today, well, the Bank of England met, and Mark Carney had to defend the fact that they did not raise rates. Now, if you go back to April, he had given a speech that said, that even though there was a rate hike priced in for May, he said there are other months, other meetings during the year that we might be able to do that, giving the market a little bit of a heads up that maybe inflation and growth weren't going to be strong enough for them to raise rate in May, and albeit it wasn't. So he had to defend why they didn't raise rates, and how are they going to possibly raise rates later on in the year if they didn't do it now? And I think he's just taking the cautious road, and which is probably smart, because if you look at what our Fed did in the U.S., they were very slow. We did one rate hike in 1 year, one rate hike the next year, and then we started to add multiple hikes. And I think that right now, the last hike we saw from the BOE was back in late 2017. So they just want to kind of walk this through here a little bit, and I think he's wise to be cautious, because once you raise rates too quickly, it really means you're probably going to be pulling back soon if things don't work out. So they need to see the growth and inflation levels that keep him comfortable, that keep them comfortable. Likewise, when you add in the volatility of the Brexit exit, that also is going to add something into the mix that we didn't have here in the States. So right now, the pound's still seeing a little bit of bearishness versus the euro and the dollar. It'll be interesting to see how things trade following today's BOE meeting. This is Todd Colvin coming to you from the floor of the CME Group.